going to commence the next motion, and I will introduce our next speaker, Ross Dick, to talk about covering your assets.
All right. Just pass around. This is who I am. So I'm Ross Dick. I'm an owner of Nyclic Insurance. I'm a third generation. Actually, my son's in here, so we're fourth generation now. Property and casualty insurance, some benefits. In Worcester, we're right downtown in the Glass Tower, across from City Hall. And we do insure a number of nonprofits. I think currently probably 20 plus nonprofits. So certainly have a comfort level in insuring nonprofits. Probably the largest one we have spends over $500,000 in insurance, and we have them from people spending $500 in insurance. So kind of a broad spectrum. I'm on 5 different boards, so I get the board side and I get the nonprofit world pretty well. But there's always, there's always new, there's always different configurations, and there's always, the evolution. And the concern is, especially in starting, is to make sure that you are covered. So how I like to look at it is the need to have versus nice to have. So you first need to look at need to have. So we do have some laws that we need to follow. Probably the most important thing you need to worry about is workers' comp insurance. There's, depending on how you're set up, and there can be all sorts, probably we have 8 or 9 organizations in the room, and there may be 6 or 7 different setups. So I'm happy to take any questions, so interrupt me along the way. But once you have somebody employed, and don't be too concerned about whether you're paying them or not. Because if they're injured and they're under your employ, they have rights. And if we don't have workers' comp insurance, it falls on you. I've heard every argument in the world why somebody feels it shouldn't apply to them or whatever. But the reality is, if there's a serious injury, all the arguments go out the window. So now you have hospitals that are looking for reimbursement. You have family members of the injured party who are looking for reimbursement of lost wages or lost opportunity and everything else. So there's been all sorts of cases over the years. So when in doubt, you can call. There's a workers' compensation bureau in the state, and there's one in every state. It's not unique to Massachusetts. Workers' comp is a national law, so there's workers' comp requirements in every single state. And every state has a Department of Insurance or workers' comp bureau. So if in doubt, call them, ask them, tell them, be honest with what you have. The startup doesn't necessarily have to be really expensive, but it is going to be based on the wages, percentage of wages, against a classification that determines the risk of what you do. So manual labor. So we do a lot of workers' comp. We have a specialty program, workers' comp results. We specialize in turnarounds, so we try to help those companies that have had a bad experience of workers' comp. Some of the highest risks we have are roofers. So they're paying $30 per 100, or 30% of their payroll goes to workers' comp, which is huge. And then we can have all the way down to a clerical classification, which is 15 cents, 20 cents, somewhere around there. So $30 to 15 cents. So it's a big, wide range. The greater the exposure to injury, the greater the cost. So that's the reality of that. If you're thinking, go ahead.
So if you're a business, you have different rates for different roles within the...
Yeah, there's a thing called governing class code. So there's a standard code for who you are and what you do. And then they always allow, so that even if you have some people that are doing some different things within that, so if you're a landscaper, you have a landscaping code that covers almost everybody that's out doing things. If you have some people back at the office, so you got a landscaping company that has 20 people out mowing lawns and blowing and pruning trees, etc. They're all gonna be under a class code, and then we could do a separate code for the people back at the office. So maybe we have a bookkeeper, maybe we have someone that does the bill, does the billing, someone answers the phone and all that stuff, takes appointments. So they're gonna have the low code, but that's kind of how it's broken out. There are times that allow you to spread it out a little more than that, but it takes the approval of an insurance company in order for you allowed to split it. And any time that people are doing cross jobs, so they're doing administrative and out in the field, it all goes to out in the field. They don't allow you to split like that. So if you're setting up or starting or planning, certainly you wanna know what, you gotta build in that cost, for workers' comp. And the Bureau, insurance broker could probably help you with that if you gave them, what your projections are, or if you don't wanna talk to an insurance broker or you don't have one, certainly call the Bureau and you can get a sense of what, number one, the rules are, and number two, what you can expect. Next thing that's required is automobile insurance. Not every state is required. For example, New Hampshire, you don't have to have insurance to drive an automobile in that state. There are a number of other states that are called financial responsibility states. So if you drive, if something happens, you have the financial responsibility to, if you don't have insurance, to make them whole. State of Massachusetts, you have to have insurance. You don't have a choice. So if you're going to have vehicles that are owned by your company, that's going to be an insurance expense, and it's going to be a business insurance expense. So don't take your knowledge of what you're paying for your own car to think that that's going to be the cost. It will be different. In some cases, less, oftentimes more expensive depending on what you're doing. The other piece with automobile insurance is that you have some type of exposure if you have people that are driving their car or somebody else's car, but not the business car, to do things on behalf of the business. So if you're driving to a site, if you're driving somewhere, if you're moving around because your business has you move around, not coming and going to work, that's an individual's on their dime. But if somebody's moving around because of the business, there's no business exposure there. So if they get, so two things can happen. Number one, if they get hit or injured in their car when they're doing something on behalf of the business, they have the right to be protected as a business. There's two things that will happen. One, there's a workers' comp because they're on the job even if they're in their car. But number two, they are represented as an employee, so they'd be represented under you as a business. It also works the other way. If they injure somebody, what's going to happen is there are going to be two lawsuits. One against the person individually and their automobile insurance, and number two, if it's worth and they understand that they were in a business situation, the business is going to be sued. It happens all the time. So there's a thing called non-owned and hired.
Called what?
Non-owned and hired. So if you have a package insurance for your business, you pick up that coverage under that. If you have an automobile policy, you're going to pick it up. So your automobile policy, number one, is going to cover whatever automobile you have as a business. Number two, you add non-owned and hired, and that means that any vehicle not owned or hired by the business is covered by the business auto policy. So if you have that exposure, if you have people running around on behalf of the business, certainly something you want to think about and to protect yourself. The other sorry, go ahead.
I was wondering about what you said earlier. Why won't they allow you to split the cost between administrative?
The reason, because the reason why they don't, they fall towards the most the biggest risk. So if they allowed that, it would kind of break down the system. So everybody would. And there was a time that they allowed that. So what you did as a broker, you tried to do everything you could to push everything administrative and a little bit, so you had everyone doing a lot more administrative than they really did. So they just decided, and the rates are all determined based on actual losses. So workers' comp is really designed, unlike other insurance, workers' comp is designed to be a method to pay for the losses of, through workers' comp, injuries. So it's just trying to even off the cost. I may not feel that as an employer if you've never had a loss, but they take all the losses and they, by industry code, and then they average those out, and they charge, that rate that they charge is the actual losses over the last 5 years in your industry that's happening. So they're really trying to just level that off and making it affordable for you as a business owner to cover those big spikes that happen. So somebody gets injured. And you don't have to have a really risky type job or business to have injuries. You have all sorts of crazy injuries. And if you didn't have the workers' comp insurance, you would never be able to afford it if you had, if somebody was out or could never work again. I mean, those are, hundreds and hundreds of thousands of dollars in workers' comp. So it's a little different situation, but the whole idea of workers' comp is just to spread out the cost among all the employers that are doing the same thing, and making it affordable. So that's how they handle it. The next thing in terms of requirement are, if you borrow any money, a bank is going to require that you have insurance. Some of the and or if you lease. So those kind of fall in the same category. It could be in terms of you signing a rental agreement. Most places where you have a rental agreement are going to require that you have some type of liability insurance. If you lease a photocopy machine, most companies are going to require that you list the photocopy machine on your property insurance coverage. So there are any number of those types of things that are they're going to require you to protect whatever it is that you borrow the money against, so that if it's gone, damaged, etc., insurance will put it back and therefore protect whoever's lent you money. So those are kind of the have-to-have. Be prepared for those if you're building, looking to expand, or if you're building out and starting your business. Build those into your budgets, etc. The nice-to-have, which you certainly would want, are the general liability. So general liability is basically the slip and fall. So if you're looking at this building, so people are coming in and out, so if somebody gets injured by just coming in and out of this building in any way, it's going to fall into their general liability. And it's going to fall under that regardless of whether, I mean, if I just trip and it's my fault, I didn't see something or whatever, it's not the negligence, it's still going to be, it's an automatic coverage. So they're not going to fight in terms of whether, it was my fault.
You left your glasses at home.
Right, right, yeah. I could take a header just walking up this, down the stairs, and in essence, that's going to come back and on the general liability policy. Go ahead.
Difference between the need liability insurance versus this
So there's
additional?
You may have a requirement in a liability insurance because you're because you took out a lease, and so the landlord could require it. They have a right to do that. Or if they don't, now it's a nice thing to have. So you ought to have it. You ought to protect yourself. They're the exact same policy.
Okay.
And then the other side of that is property insurance. So if you own a building like this, you want to insure, you need property insurance to insure the whole building. If there's a mortgage on it, the bank's going to require a certain amount, and they're going to dictate exactly what you need. If you just rent, you still more than likely want property insurance. So you want to cover for the contents in here. Anything that's not part of this building is contents. So typically you would have look at the more valuable of your contents and come up and get a quote for, so if you have computers or, the likes, office furniture, et cetera, that comes under the property. Oftentimes you can just package those two things together on what's called a BOP, or a business owner's policy. Little harder to do as a startup. Insurance companies generally aren't excited about startups. The reason for that, nothing against you or what you do, but just startups in general, less than 2/3 of businesses last into the third year. So businesses start all the time. That doesn't mean that 2/3 co-ops or you guys or whatever, but businesses start and stop, and that's just the nature of it. So insurance companies want to jump in after there's been that flush out period of people becoming successful or not, number one, and number two, they want to jump in when there's been experience determined. So an insurance company would much rather say, okay, I know what I'm up against now because the ABC company or co-op or anything else has been around for 10 years, and I know what type of business they are from insurance risk, because I can look back and see what kind of losses they've had or not had, and they can determine appetite and price. Go ahead.
So startups have a hard time getting covered?
It's harder, and there are less options for them, and that typically means it's
And more
going to be
expensive?
it's going to be more expensive early on, by the nature. It's the nature of, insurance companies are out there trying to determine risk. And it's actually much better today than it was 15 or 20 years ago. We now have standard companies that will jump in a lot earlier. When I first started, you had to have a company 3 years before we could enter a standard market. Now a lot of companies can get in there the second, after 1 year, instead of after 3 years. And even some, initially, if they have other experience, so if they've had other business experience, we can grab that experience and apply it. But as a general rule, a new business is much riskier. There's no question about it. And then the other piece is what you do. If what you do is more unique, so there's not a lot of what you do out there, it again makes it a little more difficult to find a lot of companies competing for your business. Because insurance is an it's a numbers game. Insurance is an actuarial game, and they're just playing with numbers. They want as much statistics, and then they can determine rate and risk and all that, and that's what insurance companies do. So when they can't play the numbers against it, there's a higher, there's a penalty for that. The other liability is professional liability or errors and omissions liability. And unlike general liability, the professional liability is basically protecting against it. It's an advice coverage. So the people that have professional liability are doctors, CPAs, lawyers. There could be, social services, any number of social service organizations that are offering advice. So where the coverage comes in play is something happened because you recommended the wrong thing, it was poor advice, or you had the opportunity to recommend appropriate advice and you did nothing. So you missed, and you were in a position, and it would have been appropriate to do that. So certainly plenty of nonprofits that are in a professional capacity and need professional liability. General liability won't pick up.
Not with our cooperative, but with my nonprofit, we have a community, basically a community workshop. And we have, so the community generally works with other members of the community on different projects and stuff, but there's a certain element of sort of staff volunteers who are, they're not employed or they just sort of they volunteer, watch the space, help clean up, are teaching people how to use machinery or giving people advice on projects that they're working on. It's, it's a very informal sort of collaborative sort of environment, but is there any risk for like a staff member like giving bad advice and then someone coming back and trying to claim damages of some kind?
If someone is paying, if you're providing advice and someone is paying for that advice, there could be.
If it's so there's a membership to the space, not any guarantees of any advice or anything, just
Yes.
access.
So then that should be
No, it's fine.
fine, and it
Sure.
shouldn't be a professional. It's really when somebody is paying for and you're offering advice and you're in what's considered a professional capacity, so you have specific and unique knowledge,
Mhm.
and that you're passing, either expected to pass on the knowledge because of some agreement or exchange of dollars, or you fail to do, so you, again, either give the inappropriate or fail to, and there's been, certainly in the nonprofit world, there's been plenty. I can't go into some, but anyway, we've been involved in a number over the years in some big cases. One of which, so we did have an organization, there were a number of them, and the organization is no longer in place, but it's an organization that allowed people to reach out to them if they were struggling, and would do so without without any recognition of who they were, and wouldn't share, it was all confidential. And anyway, the long and short of it, someone took their life, and so there was now we had professional liability, and then all the board of directors were, feeling was that if family members knew of this, they could have done some things, and they allowed for things. I think they allowed a person to go to a summer cottage off season or whatever, and anyway, wouldn't have done that. So hit the professional liability, and then the next piece is the directors and officers. So it was kind of a landmark case. It actually happened in Worcester. It happened almost 30 years ago. And it changed both some insurance things and some ways of nonprofits, and regarding rules and confidentiality and sign-offs, et cetera, et cetera. So directors and officers, you may or may not want or need, nice to have, certainly, but this is if you have a board of directors for your organization, the directors and officers coverage would protect those board members, whether they're volunteers or paid, for any advice that they have offered or anything they have signed off. So, you know, in a case, if they've signed off on having practices within the organization that become harmful, that could be, you know, they can get sued, that can protect them. They can get sued for financial loss, so somebody lost money because of that. So there's all sorts of things that directors could be, anyone can sue anybody for any reason. So there's two things all these liability insurances do. Number one, they protect against an actual payoff, but number two, they protect, they give you legal representation. There's far more money spent in legal representation under all these coverage than there ever is in payouts. So even if the risk is low, so you say, why do I need that? What's the real risk from a liability standpoint? Remember that anyone can sue anybody for any reason, and if they do, it's an expensive process to go through. So if you have liability suits, it's very nice to be able to turn that over to insurance company lawyers instead of hiring your own lawyers that get expensive. So we see cases all the time that have legal fees running $200,000, $300,000, $400,000 on, you know, cases you're looking at, you know, just crazy to think that that kind of money will be spent, but it happens. I mean, agency our size, we're a mid-size agency, we probably have at least one that goes like that every year. So it happens all the time. So certainly the risk is out there, the risk of being sued, is out there. Kind of from there, and again, I can go into any more depth or whatever, but I encourage that you do as much as you can in terms of planning. The thing I run into the most and what frustrates our clients, the most is that they've made a decision and then they come to us or come to me at the 11th hour and then we're trying to put something in place or make the changes or whatever, and then they're very disappointed with the outcome. Either the cost was too much or we might have trouble satisfying or whatever. So I encourage you as much as possible, if whoever you're dealing with, to share plans out as far as you can. Matt does a good job with his group of trying to be out in front of that. I have a lot of, I fortunately have a number of companies that do that, but I have a lot more that don't, so they do it the last minute. So anytime we can plan and give you a sense, plus the answers may have some bearing on what your plans are. So, I mean, a simple example, we have a contractor who does a little bit of roofing. Well, we finally talked them into just farming out their roofing. Actually, they made an arrangement with somebody and they got paid a healthy finder's fee for anything they push over. Because the cost of insurance, just because they did 1 or 2 roofing jobs a year, their cost of total insurance, we got to reduce 30% when they took out a couple of jobs a year in roofing. So there can be some exposures that you take on that can throw all of the rest of your insurance out of whack. Because the company, it may limit the carriers that are willing to take you on because you do something. Or it just may mean that the carrier that you have looks at you differently because of that exposure. And the reality is what you want to do as a business, you want to best present yourself to the insurance market. I know everyone doesn't want to, I mean, I think, I have a lot of people who kind of challenge the insurance market, but the reality is, to best play the game, you want to present yourself, your business to the insurance market the way they look at risk. So the better you can do that, the better off you're going to be. And the difference in terms of that line item can be 30–40% easily, just by the way you present yourself to the insurance market. So,
Ross, I have a question.
sure.
Is there a recipe or formula or general guidelines for how much of your expenses should be spent relative to insurance?
There's not, because depending on the business you are, there's a wide range in terms of insurance costs. So it's funny, so for example, on workers' comp, I could take a 6-person roofing company is going to probably pay 4 times more insurance than a 50-person law firm. So it's just, there's no, it's really against risk. So roofing companies, contractors, some of those, they just have to set, their pricing has to accommodate that. So their percentage is way out of whack than if you look at some low risk. The best thing to do is look within, if you can get any data within your industry, best practices. So now you're comparing industry to industry, that's really the only way you can get kind of a decent comparative. And most industries have some pretty good best practice numbers out there. So, yeah.
Can you explain the different roles in insurance, a broker and an underwriter and an insurance company and all those different things?
So, so my feeling is that there's a role for the business, and whoever's the lead player there. There's a role for the broker, and there's a role for the insurance carrier. But for the insurance broker, again, the broker ought to be positioning you and presenting. They have to present you to the marketplace. So that's the role that you want. You want somebody in a broker who can look at multiple opportunities so that you're not just locked into competitive situation. The reality is, starting out, you may not be able to be in that, so oftentimes when we're dealing with startups or whatever, is we get a really limited play and we're just trying to get it up in the best we can. But then once we start, and get a history and get a track record, then we're just keep trying to look and see where the opportunities. In some cases, it's only a couple, in other cases, you know, there are 20 or 30 places where we can try to pit insurance. The ideal is to place an insurance carrier against another insurance carrier in terms of fighting for your business.
Can I
Yeah?
ask, can you explain what a broker is, as if there's people here who don't know what a broker is?
Sure. So, in most cases, especially so you can do two things. You can go directly to an insurance company. That happens more in personal lines. So you can go to Progressive, Geico, you can go directly to them, and you don't have a broker involved. In 90-something% of the cases in commercial insurance, you go through an insurance broker. So we're considered an insurance broker, or you'll hear them called also insurance agent. And so the agent or broker is representing you, the client, not the insurance carriers. But they do have contracts with a number of different insurance companies that they can go to. And then in addition to that, insurance agent and brokers use other brokers, which would be considered wholesalers, to even expand the market further. So locally, Quaker Special Risk, and there's a number of different, you may know, but everywhere there are those. So it just spreads it out and spreads it out. And again, the agent and the broker is representing whoever the insurance buyer is. And even though they're contracted with the insurance companies, they are representing the clients. So,
And the client doesn't pay extra to go through a broker, right?
client does not pay extra. Companies pay back to, correct, the companies pay the broker, not the client.
So if you're working with a broker, they are finding you the best deal or the right situation for you out of their contracts. They're not going beyond the contracts that they have.
You can go, so where you go beyond the contracts is, we go to wholesalers. So when we go to wholesalers, they have, you know, it expands the web and expands the web. So if we go to a wholesaler, so we have like 26 contracts. We can go to a wholesaler who has another 15, so now we're up to 41. But we could go to 4 wholesalers. So now we could maybe reach, 60.
And then you have access to those insurance companies as well.
So we can get to all those insurance companies. So some through who we directly have a contract, and others that we have contracts with brokers who then have additional contracts. So when we deal with specialty, unique exposures, we typically go through what are considered wholesale brokers. We insure 2 armored car companies, and there's only really 3 insurance carriers in the United States that write that. So we only write 2, so we don't have enough clout to have our own contract, so we have to go out and find wholesalers who can do that.
Will the brokers also be representing you in case of a suit?
The brokers are representing you in terms of advice. If you had a suit, the insurance company is the one who represents you. So you're buying a contract from an insurance company to represent you if there is a loss. So they're gonna go to court with you, and all those things. And whatever level of insurance you have is the amount that is covered. In most cases, there's unlimited amount they can spend in terms of representing you, and there's a fixed amount you bought from a liability standpoint that you're protected for. 300,000, $1 million are the typical levels.
So, was Stone Soup a unique business, a startup?
Stone Soup is unique in the sense that, there's 1,000 nail salons, and there's about 50 companies that are in nail salons, because there's a ton of them. So how many Stone Soups are there, locally, or, you expand it. Anytime the number is lower, it is considered by insurance standards unique, more unique.
So, does Stone Soup have a track record? Do we get cheaper insurance over time?
Yes, you've had some favorable, experience. It was certainly harder initially. We've been able to add some things without adding cost. So there's some different ways that, history has helped Stone Soup. Well, or, actually, sorry, I insure Stone Soup, but I also insure Worcester Fruit, so I co-midnight. So, but anyway, so there is, in Stone Soup's here, in my experience, my feeling is a newer experience, because we're only into year, we're still in the, well, we had the pre-building being completed experience, and now in the first year still of that, so there's not enough experience on that, but that will, with positive experience, that will continue, to expand, carrier opportunities or whatever. Yes?
Just the question that I always had, being a worker owner,
Yeah?
it's like if something happened to you, you don't sue yourself, right?
Correct, so,
It's just,
you can't, yeah, so you couldn't sue yourself for your own negligence, for example, so, so there are laws that you have to follow, whatever. But from a workers' comp standpoint, you can have workers' comp, and when you go through the workers' comp process, it's all laid out there, so it's not a question of, so if you're injured, there are actual dollar amounts for types of injuries, there are payout levels, and whatever, so you certainly are eligible. There are opportunities for you to exclude yourself, as an owner, up to you, if you wanna do that, or whatever.
Can you talk about workers' comp and volunteers too?
Yeah, so if you, you have to make sure, so we've had it before, and people say, oh, I don't need workers' comp, it's just me and I've got some volunteers. Well, you absolutely need it, because if the volunteer gets hurt, and especially if the volunteer gets seriously hurt, and, you just see some crazy, someone could throw their back out for life because they misstepped walking down the stair. I mean, anything can happen, and anything does happen. So, because the other argument people say, well, they're just coming in to type names into a computer once a week or whatever. I don't need it, whatever. But they can still have things that could happen, and if it's in the course of considered employment, regardless of whether you're paying them, it would fall under your workers' comp.
Not general liability?
Not general liability if they're doing something. So if they're an employee, so if they're in, regardless, forget for a moment if they're being paid or not being paid or whatever, but if they're doing something that would be a normal, thing that an employee would do, then it's gonna fall into the workers' comp side. They're not a guest. So liability is for third party. Yeah?
So then that means my exposure is actually a lot larger than just my volunteers. So, because if anyone in sort of this workshop, so if like someone was helping out, so if someone was helping out and they took out the trash and they got hurt and they claimed that they were doing something for the company, then my exposure is huge, then, isn't it? Could be anybody who's in this sort of workshop if they're doing anything sort of for the community. Because like we sort of promote everyone just sort of clean up after yourself, help out around the space sort of thing.
Well, I mean, if you're bringing people in, so if your organization is bringing people in for an event, for a seminar, or for something like that, it's probably going to be under general liability.
Okay.
If you have volunteers helping you with that event, regardless of whether you have the people, so we're all at this event and we ask people to, help cook or whatever, they're not gonna be considered employees.
Okay.
Stone Soup is putting on this event, and their general liability would cover the exposure for this event, so, you know what I mean?
Sort
Does
of.
that make
Yeah,
sense or not?
okay.
Yeah.
So like if I have to cleaning up the tin foil and I slice my hand on the tin foil, I'm not an employee, that's general liability.
That would be under general liability, so you don't have an agreement here to come in here, you didn't come here as a volunteer to help Stone Soup, you're here for this seminar. So that's a general liability, and so if any of you got hurt, yeah,
I was wondering, is it common for the insurance company providing your, say, general liability, is it common for them to also provide workers' comp, or I'm confused about where to go in workers' comp?
so typically the same broker that could get you one type of commercial insurance certainly would be providing all the types of workers, all the types of insurance, including workers' comp.
And do you find that those are usually packaged together from one company, or they go to different places?
They go where they need, so in our state, in Massachusetts, a lot of the, insurance goes through the workers' comp pool, and then it's assigned. So we have over 60, I think we're up to 65% of all workers' comp is through the pool now.
But different insurance carriers will handle different kinds of insurance for one company.
Correct.
Through one broker.
Yes, through one broker, right, so not uncommon that you could have four or five different policies with 4 or 5 different carriers from one broker. Could be one broker, or you could have it through 5 brokers. I'll make the argument, where I would stand is that if you use multiple brokers, is you just need to be really careful that somebody's coordinating all the insurance so that you don't have a lapse or you're not missing something somewhere. The advantage you have with one broker is they own that, they kind of have that responsibility, so if they miss something, you go back to E&O, all brokers have E&O, and you have someone to point to. And then you have it all over the place, really hard to point fingers at whose fault that was,
So, a few co-ops are in the situation where they have fiscal sponsors that carry
Okay.
the insurance for
Yep.
them right now. So, Diggers and Future Focus are in that
Yep.
place. And so workers' comp wouldn't change much if you're, in terms of, like, you're under a broker, you have to pay based on how much is paid, right? If you're outside, you're independent, company, then you have to pay that similar percentage, right, for workers' comp. But a liability policy can often cover several activities, right? So I guess the question is, how do you balance, like, when, in terms of size and, what are the, what should be considered when you're looking to, when these co-ops are looking to become independent?
Well,
Additional coverage that will be needed, additional costs.
so there's two things. When you're together, or whether you're under somebody else's umbrella, so that somebody else is the fiscal agent, you've got to make sure that you're picked up through that. So, make sure there's a process to walk back through that, so that the fiscal agent has listed you and listed what you do on all the types of insurance. Number one, when you're breaking off, ideally, if you're breaking off on your own, is that get as far out as you can, have a 1-year budget in place, so you need to anticipate, so what insurance carriers are interested in is, revenue is a driving factor. Square foot can be a driving factor if you're, so if you're hosting, we're going to measure part of your exposure based on square foot, because your square foot is going to determine how big a risk could be at any given time. And then, if you're projecting out, you're projecting for the next 12 months. I know everybody is very aggressive and wants to have a great and optimistic budget, but be very, I recommend being more conservative than aggressive, because you're going to pay for what you put there. So it makes no sense to be, putting some big number because you're hoping that you do really well, and you don't hit it because you'll have just paid for insurance that you didn't need. You can always adjust it along the way. So I would go low, look towards the 6, and if you do embark on your own, you take out the insurance, then you can always adjust it and adjust along the way. So if things are now looking better than you had anticipated, adjust it upwards, because you will be audited at the end of most of these coverages, and you'll have to come clean, and, you know, and pay the appropriate insurance, based on real numbers.
So if you go too high, is it harder to adjust it down than adjust it up?
If you go too high, when you make the adjustment down, you've lost any history, so they'll adjust it from that point forward. So, in most cases, so yeah, you've lost. So that's why I always recommend, you know, go lower than higher, but understand you're responsible for the end number, or find out if you're responsible for the ultimate number. So a lot of the cases you are. Workers' comp, there's no question. The workers' comp, you know, you pay based on estimated payrolls, and you're gonna pay at the end after they do the audit, based on what the real payrolls were in the appropriate classifications. So again, what you can do, you do one of two things. Either know that's coming, so if payroll's a lot higher, know it's coming and make sure you're prepared to pay that, set it aside or whatever you need to do. Or you can always adjust it up along the way, if that, you know. So sometimes it helps moving it to the next fiscal year, because maybe you're getting more money or you're more, you know, whatever. Other times it's much more appropriate to try to get it in the year that it really happened. So anyway, you can certainly play with that.
And one piece of advice coming from the person in the company that deals with the insurance, that it's a considerable amount of work that you should plan ahead. Like, there's audits, right? You do workers' comp, and then at the end of the year you have to prove which fell in which classification and provide all that work. You have to deal with the monthly billing if you get it financed, to, you know, do monthly payments. Keep track of each of these and the reporting to the insurance company. So keep that in mind as you're making your plan too, that just carrying all these, it's not just signing up for them, but there's other work in keeping the insurance going.
And you can actually, okay, sorry, yep.
I have a question. So one of the reasons a lot of people choose to do co-ops is because the status, if they're undocumented in the US, they can't work legally.
Okay.
So workers' comp would pay even though you do not have a social security, or it would not?
So the question is will workers' comp, so workers' comp is concerned when somebody is injured. They're not concerned with anything else behind the scene. That may come to bear for other reasons, but workers' comp has to address the injury. So what does all that mean? So we have employees, you know, so we've had employers who pay people under the table. But somebody is severely injured, now all bets are off and there's a $500,000 hospital bill and the employer can't afford it and whatever, so everything, bottom line is everything comes to a head. So, it's employee driven in support. So workers' comp laws were built and designed to protect employees. So it's not worried about all those other things, and that will flush out, and there may be some ramifications, but in terms of them getting protected, and they're protected, and that's the purpose of it.
Was the business, I guess I don't understand what happens in a situation where someone who's getting paid under the table gets injured.
Well, they're under the table, whatever, so they're not, the employer isn't paying for their insurance.
But if, so in that situation where she's talking about being in a co-op, can you get insurance, like, for an undocumented worker?
So I assume they're considered a volunteer, is that correct? They're being paid?
As an owner, so they're not an employee of the company, they're an owner.
I mean, they can choose to be employees.
Well, if they're an employee, they're protected under the workers' comp law. If they're an owner, they may or may not be. Because as an owner, they're gonna have to provide, so in a co-op, you don't have to provide you don't have to do an FID number or any,
You
so
get
an
an
owner of a co-
IEN, you get an IEN with them, like a
Yeah,
tax
EIN.
ID.
EIN, okay,
EIN.
yeah. Well,
And you use that when,
yeah, so you can still put the person, see, if the person's name can be put down. I'll check into that, but I would think, because now it's documented from the workers' comp standpoint, because that person would be, because we have to list officers, owners, et cetera, through the workers' comp, and so that's laid out on the table. But I honestly haven't run into that. I've run into a lot more of the hidden employee, the person who doesn't look like employee, who is absolutely employee, and, so. Now, the employer can get in a lot of trouble, and all that's gonna happen after, and behind the scenes, but the employee is,
yeah,
certainly.
it's like, it's a big issue with temp agencies. Cause they don't, yeah, they don't list people.
Right, so yeah, so if someone gets hurt, and we insure a number of, we insure a number of, temp agencies through workers' comp, so there's certainly some challenges with that. But again, the employee is, designed to be protected under the work comp, in almost all cases. And then ramifications after is typically what we see.
What do you mean ramifications?
So the employer,
Would have to pay back to the pool.
the employer certainly could be responsible for back taxes, cause they didn't, one thing about paying under the table, they didn't pay any employment taxes, and they didn't withhold federal taxes, et cetera. But typically they're gonna be fined. I mean, there's certainly, they don't look favorably upon employers that are trying to undermine the system, there's no question about it. But it happens, it happens in a lot of different ways, and unfortunately, there's a lot of things driving that today, including healthcare. Healthcare is very expensive for employers, and so there's a lot of ways that they're trying to skirt having to do that, so. You have some people that are just under the table and not there, but you have other people that are, working more hours than so they're being put down as lower hours, so they're not eligible for certain benefits, even though they're working. So it's kind of so they're legal to a point, but then they're not being true on the other side, anyway.
And then independent contractors or subcontractors.
So an independent contractor is really tough, to meet that threshold, to be an independent contractor. So an independent contractor has to control the job, control the tools, and not be under anybody's responsibility. So in probably 4 out of 5 cases that someone says there's an independent contractor, they're not an independent contractor. How workers' comp looks at it is the employer is responsible to pay the workers' comp of the independent contractor unless you as the employer can prove that that independent contractor has workers' comp insurance. So, so I get yelled at all the time about independent contractors. Everybody hires independent contractors.
See, but the system seems pretty robust, like the state's doing a good job of protecting that pool.
So I'll tell you, the state is investigating workers' comp like never before. I'm amazed. So I have 2 sons, 27, 25. So they're one of our good friends who was around all the time, started a small contracting painting business and whatever, had actually come into my office with his business plan, whatever, and we gave him quotes in terms of whatever. So he got his first job, and unbeknownst to me, he was gonna wait until after he got paid on his first job. He was painting the outside, this happened this summer, he was painting the outside of a big house, good payday for him, and that was gonna give him the seed money to buy some more equipment and pay for his insurance and whatever. Day one, put up the ladders and whatever, he's got a guy working with him, state auditor comes around, asks them if he has workers' so they drive around, they, you know, they have they're looking in neighborhoods that typically you're gonna either paint or have people doing yard work. And they just drive around and do a grid system and ask people for their workers' comp and picking off people left and right. Amazing. That's right. So,
Alright. So out of respect for people's time, we'll take maybe one or two more comments, and then we have another brief activity. So, anyone have any more comments or questions for us about insurance?
Maybe just out of curiosity, is your, so you said you were a brokerage?
so we're an insurance agency, yeah. So,
Okay. And so, are you just sort of a general agency and we're being recommended because of your experience with these guys? Or do you sort of cater to cooperatives, nonprofits, or this sort of?
we are a generalist. We insure, and I'm not here to sell insurance. Anyone can call me or whatever, but I'm here, cause I have a relationship with Matt and he asked, and so I'm glad to be here.
Okay.
And I speak at other, we do the insurance piece for first time home buyers and the nightlife classes and whatever, so we do a fair number of these. But I'm certainly available for any questions, even if the insurance isn't coming our way or whatever, I have no problem with that. So if anyone in the room has questions, wants to pick up the phone and call me, yeah.
Just wanna make, something explicit. Maker spaces, and hacker spaces, you have, ear to the ground, any word on, what the proper classification is for an organization like that, like Arson Asylum in Boston, for example?
Classification for workers, for
What kind of
Makerspace,
business would
or
share
hackerspace. It's, I'm gonna take that as basic, no.
Maybe this has to happen outside of
Yeah, we can do
today's
that.
meeting, we're running out of time, but
Yeah.
that's a good question. I just wanna say that there are very few insurance people that also get the community mission-based stuff that we do. And Ross is involved in the youth center and housing development and city, and a lot of, the YMCA, so that's why we brought him in, cause he not only gets the insurance stuff, but he gets some of the mission stuff.
Thank you.
thank you all.
Thanks for coming through, Ross.
Okay, yeah,
Appreciate it.
all right, good luck
Thank you so
everybody.
much.
Take care.